Hello everyone, welcome to Smart Investing. Today's video is going to be the continuation for the banking services sector. So these are the three stocks that I have for you guys today. I have BXSL. Next symbol is COFS, and the last one is ASB. So we're going to go over fundamentals, quants, and charting, which is the technicals. We're gonna go over the usual or the usual things that we usually look at that I provide on my video. So let's begin with the first page. So BXSL, today is actually, I gotta give the time and date, 10:22 p.m. Tuesday, April 11th. So you guys know that this is a recent video. So at $24.77, obviously the stock market is closed. Again, I'm in the Eastern time zone, Florida. So it is PM, not AM. So markets are closed where I'm at. We're looking at this first page. I call this my first page. So looking at this first page, we have 52-week high and low of 28 and 20. That range, that price range for the year looks awful. I've said it before in my previous videos. A lot of these banking stocks are horrible. Especially with the whole banking situation. Let me say this. I'm going to keep repeating. I'll try to repeat it in several of my videos. The financial sector, depending on which stocks you choose, can be a very great sector. But apparently, when it comes to the banking services or banking stocks, that group of symbols, all those companies, they're pretty awful. That's just the way their business model works. I can't really say what stocks in the financials because it varies. It's so big. And again, I'm not here to provide all that info for you as of today. I'm only going over the banking services sector. So I just thought I kind of cheer you guys up and not dwell on losses because it just comes with the territory. So if you're in a losing streak or you feel kind of bad lately, I know I don't talk too much uh, about losing streaks and stuff because um, I'm not really one to lose much, but I do have to see it on the other side for the person that does lose. Uh, there are better days ahead if you listen to the right person, if you have the right mentor, if you have the right information that is being told to you and proven to you, not just in words, but I like to see what is actually accurate information. So again, I'm not here to provide lip service. I'm here to provide education. Aside from a lot of other videos that are finance, supposedly finance, when they're really just like half education and half entertainment. It's not really full blown education like the way it should be. Um, and again, I hope you guys who are new to watching this channel, I hope I can provide some important information to you. I hope I can provide some education and some knowledge to you. And I hope you can learn a thing or two to become a better investor. So, with that said, we're going to continue with the first page. So, looking at the numbers, I know right away people might hate me for this. Oh, but the yield is at 11.3. That's not the only number you should be thinking about. There's so many numbers included with that. Uh, Overall, earnings, I think they're going to drop for the year. Again, 52-week high and low is horrible. Dividends, I don't even care much for it. PE ratio doesn't matter to me at this point because of the banking, situation that happened. So looking at the charting here, this is the 1 day. Now we're gonna look at the 5 year, if it had a 5 year. Apparently not. It only has 2 years worth of history, as you can see here in 2022, all the way fast forward till now. So we're only looking at about a 2 year chart. It's not really a 5 year. As you can see, it has not broken new highs. So I'm looking at about uh, getting there. I'm looking at about 24 and change, close to 25. Uh, it'll have to really, really break new highs, which I doubted. It would have to break 25.80, if that's what I'm looking at correctly. You guys are seeing that? So the MACD is telling me that it's due for like an uptrend, but with this again, with the whole banking thing and earnings are right around the corner, I think it's going to be a fake rally, like so many other stocks and sectors. Again, we have to recognize what kind of environment that we're in. Even though this chart looks okay, I see like a cup and handle here. Anything can happen. I know a lot of people uh, don't like to be losing money, but the reality is times are just going to get tougher from here on out. I'm not expecting higher highs from a bank, especially a bank. I'm expecting pretty much a fake rally, maybe up to 20, let's see, 25 and change at most. The bull scenario, maybe $1 more. Other than that, neutral scenario would be back down to around 23. And obviously, the bear scenario will be breaking new lows, which will be below 21 bucks. So that's really not a big difference from the bear case scenario. So we're at about, let's see, 24 and 77. So round it off to 25. If you go down to 21, that's only a $4 difference. That can change in a heartbeat once markets open. You just never know how it ends though. But again, we're gonna suffer a bunch of losses. Those are my expectations for Q2. I've mentioned that in previous videos. So anyhow, moving on to the quants. So obviously fundamentals, I said, failed. The charting has failed. Now we're looking at the quants. So highest rating was 7.82. Obviously, the value has to do with the pricing. Overall rating is 3 out of 5. I disagree with that. I think it should be lower. Again, I'd stay away from the banking services sector. And then we can see here, Wall Street is not even. They're not even considering underperformance or sells. So this is how greedy, stupid, and annoying Wall Street really is, because again, they're not looking out for your best interests. Why would this stock be a buy after this whole fiasco with the banking sector? And then look at these earnings estimates. They're estimating here. Well, this didn't get reported for Q4. I thought it was Q1 until I saw that at the bottom. It's Q4. That should have been reported a long time ago. If it did, then again, I just don't have the current information. So I'm going to leave that at another time. I don't know when I'll review the stock, but it's not really an interest to me. But I'll say this, with the name alone, Blackstone is highly recognized. So this is like a management fund. We're gonna look at some numbers here. Continue with the indicators here. So ROE has dropped. Earnings for 2022. Obviously, they've gone up from 2020 to 2021. Now they're dropping slowly from 2022. So year to year, starting to go down. Margins look like they're flat compared to last year. Obviously, it's been going down. Debt to asset actually has low debt. Surprise. But again, we got to look at some cash flow. I'm not really counting on this stock, to be honest. So net income, let's see what that brings. So lowered income for the year for 2022. Balance sheet looks okay, actually. The balance sheet looks okay. Now, let's see what they have for their cash flow. It's not showing me anything for investing cash flow. So they're not really investing. They can't because fearful of the bank runs. Again, with the whole fiasco from SVB, and we have here negative cash flow. So obviously this stock is definitely a no. Do not add this to your watch list. If you have it, get rid of it. If you plan on even shorting or buying it, whatever. Again, don't even take an interest in it. Stock is awful. Market cap ain't bad, and the volume seems pretty active. But again, it's just not worth it. The juice is not worth the squeeze for this stock. Again, you have to break new highs, I would think, for somebody to be interested. When I mean somebody, I mean, all these large institutions. They like to see new highs and then they all start piling in. But again, we're in a different environment, so things are gonna take a turn for the downside. So moving on to the next one, we have COFS. That's the ticker symbol. We're looking at the 5-year, really, really choppy. Looks pretty flat. If you look at all this from the past 5 years, those up and downs actually turn into it being flat. Market cap is at 192 million, very small. Volume is at 15K, not very active for a stock. 52-week high and low, so difference of at least 10, it's okay. But that market cap is horrible. Earnings at 3.1. PE ratio is at 8.1. Dividend is only paying $1 for the year, so that equates to 26 cents per quarter. When I mean quarter, I mean every 3 months. I don't mean an actual quarter. Dividend yield is at 4%. Again, wouldn't trust this stock with the situation overall at hand when it comes to the banking services sector. So I don't like the chart. Overall, I don't like the numbers on my first page for basic info, which is a little bit of fundamentals and somewhat technicals. So again, I'm not even going to bother deep diving again for this stock. for fundamentals. And again, the last stock, again, I didn't even look at fundamentals. Highest rating for this one is Momentum. Highest overall rating they have currently is 4 out of 5. I'm shocked. Again, another one. Why is this company receiving such high praise when I assume that it's going to be awful? We have here, let's look at the company real quick. So let's look at year to year. So ROA is at, it's not giving me anything. So we're going to reopen it again. COFS, so we have here year to year ROA is at 1%, stayed flat. It's gone up. ROE, earnings we have here have gone up year to year from 2019 till now. Well, till I want to say till now, but till the end of 2022. We have here debt at 92%, income, doing okay. Revenue's not showing me. Balance sheet, obviously typical for a bank. High debt, high assets. Then we have here operating cash flow. We have financing. So barely just have any positive cash flow. What is the market cap? Only about 10 mil in cash flow. They can afford a dividend. Excuse me. I don't know if they can afford rising dividends. If you look at the history, they have been paying rising dividends. So 2021, 2022. So we have here rising dividends. So 22 cents from 25. Then from 25 cents to 26. Small raise, so not bad. Pretty fair. Now, for this stock alone, Choice One Financial Services. So again, if you had this one on your watch list, get rid of it. 52-week high and low, it's not bad, but the dividend is awful. So you can't use this stock for income. You can't use this stock for growth or anything. That's just what the numbers say. That's what is stated. So next one up, and the last one will be ASB, Associated Bank Corp. 5-year chart we have here pulled up. Look at this big drop. That's a really big drop. So pretty much it stayed flat. It dropped and stayed flat. So price is at 17.49. Very active stock. So you can see here volume is over 1 million. Market cap is over 2.6 billion. Dividends are paid. So total dividend for the year is at 84 cents. 52-week high and low, not worth my interest. Used to be a little bit more than that. Yields, that's really low compared to other options. PE ratio, the most recent, close to 7.5, very undervalued, but it's not even worth it. Look at this big drop right there recently. And I'm assuming there's going to be another big drop like that. So moving on to the next one. Let's see what factors we have here. The next piece of info that we have. So Very low rating for underperform at 9%. Again, Wall Street wants you to lose money. They said 82% hold. After this stock is not even a $3 billion company, all of a sudden these analysts want to show up and change their direction and say, oh, it's not a buy, 82%, and then 9%. I wish I showed this more in my previous videos ever since last year, so you guys could even see. I mean, I might have scrolled through it real fast, but it might be in there in most of them because I actually look at quant ratings. But anyhow, you can clearly see in previous videos ever since last year, I bet if I do it in slow motion, it'll show up that everything was at a buy for Wall Street since last year up until, the fiasco, the whole dilemma with Silicon Valley Bank. Now all of a sudden people want to jump the bandwagon, as I call, and try to jump in on the action after the fact, after everything was done, and it makes no sense really to me. You gotta be in, you gotta be in the action before everything happens, like I did. So highest rating that I see was value 8.10. That reflects directly with price. So what value is stating is that it's at a cheap price. Not interested in the stock whatsoever. Charts say otherwise. Look here at a 1 year, very big drop. Like, this is scary. Like, this whole gain it took for it to go up in these months, it just dropped. Look how fast that drop is. I don't know if you guys understand by looking at that, but what I'm trying to let me be clear. This is the bottom point for the year. This is the top, right? Look how much time. So from, let's say, July all the way to like November. So July. So August, September, October, November. Excuse me for 1 sec. Drop my pen. So we're talking about a 4-month. Sorry for my handwriting. It's hard to write that. So we're looking at a 4-month period from about July, right? Fair, pretty fair to say, all the way to November. Fair to say, right? I don't care about price. I'm not looking at price. I'm strictly looking at the chart and just pinpointing. So 4-month period took from that amount of time to do that. Now we look at this chart here. So at about March, and it kind of slowed down here. So again, this was all within 1 month. Let's go to the 3-month chart and look how fast. Look how fast that fell. Boom. So we're looking at about $23 to $17. That doesn't seem like much, $6, but since this is a stock that's always traded in a low price range, that's actually pretty big, a $6 move. Because again, it'll stay within that range between usually $10 when it comes to the banks. So a $6 move, $7 move, that's huge. That's more than half of what goes on in the year. So that alone, with those numbers alone, 52-week high and low, that says a lot with these drops. So again, the math is there. The numbers are there. Everything is proven with the information being presented. So we have here, it looks flat even for this whole month. Awful, awful, awful. I don't see any interest in this stock. So if you have this stock, get rid of it, take it off. Don't even look at it. Just letting you guys know that the don't even bother with this stock. So that's all I have for you guys. Sorry for the long video. I haven't been on as much, been super busy. But again, I'll try to make another video tomorrow. Today's Tuesday, but tomorrow I'm gonna upload it, depending on how long this takes. So I have to go to bed. I have work tomorrow. So thank you guys for watching. I'll make the shorter video right now. And stay tuned for more banking stocks. So see you guys soon.